Welcome everyone, welcome. Due to popular demand, we're back with Credit Management Show number 2, sponsored by airbank.co.uk. If you have any questions about money, credit management, or any other issues related to credit or money, please let me know in the comments or email credit management, that's all one word, credit management at sos.gold. Let's go with questions. Okay. Now let's just see what questions we have here. Okay. Just a second. So what is credit? Did we cover this in the past? I think. Yeah. What is credit? 1 second. What is? Yeah. So someone asked, what is credit? Well, credit is a trust which allows one party to provide money or resources to another party, wherein the second party does not reimburse the first party immediately, but promises to either repay or return those resources at a later date. So, in essence, it's so when you borrow, it refers to your borrowing capacity. It's based on your history of paying back your debts. Okay, and it defines how much you're able to borrow cash or access to goods and services. So, for example, a credit card or a store card. Well, a store card also refers is also a credit card, because a store card does the same or very similar things to what a credit card does and has. Okay, and then so in that effect, if you think of a store card, think of it as a credit card. Just 1 second, I'm just gonna share the program. Okay, 1 second. Right. Go. One second. Just sharing and getting another question. Okay. Right. That's fine. Yes. So there may, like I was saying before, there are many instances when your credit can make or break important transactions. So to manage your credit wisely, you have to understand what credit is, as I was saying. And what credit is has a credit report. So they include how scores are generated and why credit is important. Okay. So good credit signals to lenders that you're credit worthy or likely to be able to repay money you borrow. It instills confidence. It instills confidence in lenders, okay, that they will get the loan principal plus any interest back from you, which makes you more likely to get approved for new credit For example, a loan or another credit card or a credit line with favorable terms such as low interest rates or higher limits. In contrast, if your credit history suggests to lenders that you cannot repay debts, you are said to have poor credit. Having poor credit can hurt you when you apply for a loan because lenders will have less confidence that you can repay it. And credit is something that you build up over time as you borrow money and pay back. These records are tracked by the 3 major credit bureaus and available to lenders in the form of your credit report and score. As you know, credit bureaus are, they want to see your credit report to get your credit score. They request it from what is known as a credit bureau, also called a credit reporting agency. Credit bureaus collect all the information that appears in your credit report from banks, card issuers, and other creditors, which voluntarily report your payment information. But even though credit bureaus store financial data on millions of consumers, they might not keep as much data as you think. For example, your annual income is not part of your basic credit report. So if you have a question about credit management or credit in general or other financial issues, let me know. Reporting agencies then distribute or sell that information when you apply for a loan or when a request is made, for example, by an employer who needs your permission before a report can be released. There are numerous credit bureaus, but the big 3 are TransUnion, Equifax, and Experian. So they have the greatest impact on your credit. It is essential that the information in each credit report is accurate. If there are any errors in your credit reports, contact the relevant bureau that generated the report to fix the errors and ensure that you don't get rejected for new credit needlessly. Your credit report is the master document behind your credit. Each credit bureau issues one. Credit reports summarize various aspects of your credit history for up to 7 years, including but not limited to loans that you took in the past, loans you're currently using, including any unused lines of credit, which reminds me, for example, unused lines of credit. What does it mean? Imagine you have a credit card limit of, £1,200, for instance. If you don't use that line of credit, that shows in a way that it's good you don't use it, but if you don't use it for a long time, it just shows that you don't need it. So what I suggest you do is make sure you use up to 30% of your credit limit. Okay? Just work it out. Just use maximum 30% of your credit limit per month and pay back on time. Every time. So, and the other thing is loans you're currently using, including, I read that, and how much you've borrowed. Okay, payment history, for example, have you made late payments? Or are you always on time with payments? Public records, such as bankruptcies or property foreclosures, any loans in defaults or in collections, credit inquiries for the past 2 years. And what I mean by that, credit inquiries for the past 2 years. So, for instance, if you apply for a credit card or any lines of credit, it leaves either a soft credit. Well, a soft credit shouldn't leave anything at all, but if it does, it will disappear after a month or so. But a hard credit search will leave a search marker on your credit file which is not a good idea because other lenders can see that as well. And if they see you applying for many lines of credit or trying to apply for many lines of credit, it shows that you are in financial distress, which is not good for any lender to see, any potential lender to see. Okay, so credit reports are important because they serve as a raw data for the credit scores that lenders use to assess your creditworthiness and decide whether to offer you a loan. Apart from your score, lenders take specific information into your credit report into account when making lending decisions. You can and you should review your own credit reports to identify issues before you apply for a loan. Under government law and regulations, you can apply for a free copy of your credit report. I would say you could just view it online, actually, free of charge, or you can get a free paper version. I think once a year or twice a year you can, or maybe it's £2, nominal fee. But just very important, checking your annual credit reports results in a soft credit inquiry, but not anymore. I think they got rid of it. I think so, yeah, that's right. I think so. At the first step in deciding whether or not to grant you credit, lenders often use what are known as credit scores, and I was just saying that before as well. These are 3-digit scores generated by a computer program that reads through your credit report and looks for patterns, characteristics, and red flags in your history and boils it down to an easy to interpret numerical format. Hello, welcome. Different scoring models, or the FICO score and Vantage score, for example, or you can say the other credit rating agencies, have and do calculate scores differently and assess scores on different ranges. So the FICO model in America, that is FICO model, considers your payment history, credit history length, total debt, new credit card accounts, and types of credit accounts. Regardless of this scoring model, lenders can, and usually do, interpret and make lending decisions based on your credit scores in a similar way. This includes, but not limited to, Equifax, TransUnion, and the other one which I forgot already. But lenders may have different standards as to what credit score is acceptable. Yeah, Equifax as well. Yeah, for credit approval. For example, a lender might automatically approve individual with, for example, a Equifax scoring of 740, but in other credit scoring company, it may say the same 740 is poor. So it all depends. So each company has its own scoring levels. Okay. So while between 670 and 739 may put borrowers on the hook for higher interest rates, and those with scores lower than 580 may not receive an approval. But like I was saying, so what is credit used for generally? Do we know? Well, as I wrote to the person who asked me this last week, credit is important to consumers for two key reasons. Your credit can dictate your ability to meet major life objectives, including, but not limited to, getting a loan. This is the most common use of people, for credit scores. It's not feasible for most people to save up enough to buy a house outright, for example. A mortgage makes it possible to own and build equity in a house, the fair market value of the house beyond the amount you owe, without becoming cash poor. Credit also allows you to obtain auto loans, that is car loans, student loans, and loans for other expensive products and services. Buying insurance coverage. Insurers check your credit to determine whether or not to cover you and at what rates. They use insurance scores. that are slightly different from standard lending scores. Another one is securing employment. Some employers check a modified version of your credit report, including information such as your payment history, to determine whether you are responsible or you would pose a risk to the organization. However, you will need to give them permission to do so. Obtaining utilities. To get services such as electricity or water, you might need to get a credit check. If you have not yet built up your credit or you have bad credit score, service providers often demand a security deposit. Getting a rental. Similarly to utility companies, your next landlord might ask to pull your credit. Depending on the market, your credit could prevent you from renting. That's not good, is it? So credit scores are also used to prevent lenders from discriminating against borrowers based on a race or other characteristics. These scores are meant to give an objective representation of your credit history. While they may seem to present a barrier to getting a loan, the ultimate goal of credit scores is actually to make lending processes fairer for borrowers. So you may ask, how would you go about getting a credit? So if you don't have a history of borrowing, and for example, which includes either mortgage and also credit card or store card, as I mentioned before, it can be a very challenging situation to begin building your credit. Okay, so then what do we do? So you need to have a job, and you may have to open a credit card with a co-signer who has established credit. Other options include secured credit cards, which require a deposit. Store cards, or store credit cards, you can say, it's a student cards possibly. As soon as you have your name attached to a loan or a credit card, credit agencies will most likely, then they will begin building your credit report. If you use your credit responsibly over a period of time, you'll gain access to more of it, which is a strange part, isn't it? So the more you use but sensibly and you pay back on time, you'll get more credit afterwards. Okay? Right, so the other, what was the other question? I forgot. I just have to pick up the question. Yeah, so someone asked me, is no credit better than bad credit? So, how can I say? Well, having poor credit or no credit makes it challenging to qualify for a credit card, home loan, or mortgage. That's because lenders view you as a potential credit risk, as I mentioned before. Because if you have missed a payment or lack experience of managing credit, that's why. Yeah. So, but the good news is that both situations are flexible or fixable. Sorry, you can bounce back from bad credit and build credit from scratch. But having no credit worse. But is having no credit worse than having bad credit? Well, like I wrote to the emailer, this is how it is. Having no credit means that you don't have active credit accounts reporting to the credit bureaus, or your history is too limited to calculate your credit score. This could be the case if you never applied for credit, like a credit card or loan, or if you haven't had activity reported in the past 2 years. Very well. While it's common for young adults to find themselves in this situation, a variety of other people may not have credit at all. If your accounts are closed or inactive because you leave the country for many years, you could return to a thin credit file. By that I mean, for example, thin credit file is, so there's no history. So you left the country, now you're coming back to your country of origin, for example, and then you want to apply for a credit card. You may get turned down. And the reason is because your history has dropped off your credit file. Okay? So, what do you do? Okay? So, the same thing is true for new immigrants to the country. If you move to the country, you won't have a credit history until you have credit in your name. Other groups of consumers may find themselves with a thin or non-existing credit file. Are divorcees, widows, and widowers whose spouses handled all the finances. Borrowing money is a challenge when you don't have credit because it's hard for creditors to measure how likely you are to pay debts on time when you have no credit history. So you may ask me, what does it mean to have bad credit rating? So bad credit rating can occur when you have negative marks, such as payments more than 30 days late, bankruptcy, or accounts in collections on your credit report. Negative marks lower your credit score significantly, making it difficult to get approved for a credit at a competitive interest rate. So if you have credit card or loans or other lines of credit, as it's called in the industry, please make sure you pay as much as you can if you can't pay the full balance, because one thing is you'll get charged more interest. So that means you have to pay interest onto on your line of credit. For example, a credit card, if you don't pay it off in full by the due date, then you will have to pay an interest, which is bad for you and bad for your credit score. Okay, so so negative marks lower your credit score, making it difficult to get approved for a credit. I can compare rate. How long it takes to recover from bad credit depends on the negative records on your report. Generally, late payments, accounts in collections, and bankruptcy stay on your report for up to 7 years. And something is called Chapter 13 bankruptcy can linger on your report for up to 10 years. However, the impact and negative marks on your credit score decreases over time, which is good. Sorry about that. So is having no credit worse than bad credit? Well, that's a good question. And I answered this in this way in the email I answered to the person. It depends on the severity and reasons behind bad credit. If you miss one payment and catch up on the balance, a lender may be willing to remove the late payment with the credit bureaus, putting you right back where you were. But, however, taking steps like paying off a balance or disputing incorrect records could help you see more improvements too. In this scenario, having less than perfect credits may be better than having no credit, simply because you can remedy these issues causing your lower scores. While it may be better to have some credit than no credit at all, it could take a long time to rebuild your credit score. The accounts you have that are in good standing will show lenders evidence that you're capable of borrowing responsibly, so focus on keeping them in good shape. It's always better to have a tool in the toolkit than no tools at all. It's true, yeah. However, if you have more serious systematic issues such as ongoing history of late payments, accounts in collections, or bankruptcy, it could take years to recover from damage. In this scenario, as I gave in this scenario, bad credit could be worse than having no credit at all, because it may take longer to rebuild your credit history and improve your score. When starting from a clean slate, it might take a few months for the first account to appear on your report. So it could take around 6 months of payments for your credit score from that account activity. From there, you can start building a positive payment history, or a PPH, positive payment history, without worrying about the multi-year lingering effects of negative marks like bankruptcies. So the other question I was asked is how to establish credit or good credit. If you have no credit, take the following steps to help you build good credit. And the steps are, so like I said before, only borrow what you can afford to repay. Okay, it's not so a credit line of credit is not free money. Just know that. Okay, I know it's basic, but just make sure to understand what a line of credit is. Again, a credit could be a loan, a mortgage, a credit card, which is they're all a line of credit, which is you can say loans. Okay, so a credit card isn't a permission to slip to buy things you can't afford, like I was saying before. The quickest way to get into debt and credit trouble is to so if you think of credit card as free money, then you're gonna lose. So just pay back on time and in full if you can, because otherwise, like I said again, you'll be paying more fees if you pay late or don't pay at all. You'll be paying less, and your credit history will suffer as well. So the best way to build good credit is to create a habit of charging only what you can afford. This habit lets future lenders and creditors know that you're a responsible borrower. You find it easier to borrow money and get a new credit when you're sure that you have discipline to borrow only what you can afford to repay. Not only that, only charging what you can afford helps you avoid excessive debt, of course. The same rules apply to loans. Regardless of what the lender says you qualify for, you should only borrow what you can afford to pay back. Okay? Before you shop for a loan, review your budget to see what monthly payment you can afford. Make sure your loan payment doesn't exceed the amount you've come up with. Okay? So use only small amounts and credits you have available, like I mentioned it before to the other emailer. Maxing out on your credit cards or even coming close is irresponsible. But we've all done it. But just make sure you pay it off in full. Okay. Particularly if you don't plan to pay the whole balance off within the month, lenders know that borrowers who max out their cards often have difficulty repaying what they've borrowed. Your credit score also suffers when you run up big credit card balances and don't pay them off, like I mentioned before. Keeping your balance at a small percentage relative to your credit limit is best for building good credit. Remember 30% rule. Let's say 30% of your credit limit, only spend that much and pay it off in full. In full. Repeat after me. Pay back in full every month. Yes. Okay. So credit score also suffers when if you don't pay it off at all. Of course, that will suffer even more. What else? So start with only one credit card. That's also true. Hello. It's easy as a first-time credit. Hi. It's easy as a first-time credit card user to accumulate a collection of credit cards with just the few years of using credit. Be careful not to make the same mistake of some people of opening up too many credit cards too often. Like I mentioned before, if you apply to too many lines of credit, which is again reminding you what a line of credit is. A line of credit could be a credit card, loans, mortgage, and other lines of credit. Okay. So if you apply to too many lines of credit in a short space of time, it shows to the potential lenders that you are in financial distress, and that's not good for you or your credit report. All right. So yes, too many credit inquiries into your credit report and too many new credit cards can negatively affect your credit score. Credit inquiries count for 10% of your credit score, and opening new credit card lowers your average credit age, a factor that's also 10% of your credit score. Spend time learning to be responsible with credit and apply for new credit cards sparingly. So I would say maybe once a year, or you know, I mean, you don't even. I mean, if you have one credit card, just be happy with it. Remember, it's credit line of credit is not free money. You have to pay it back in full. Okay, pay your credit card balance in full. Yes, again, that's another question I've got, and I wrote this to them. If you're only charging what you can, as in, if you're only spending on your credit card what you can afford to pay each month, paying off your full balance each month won't be a problem. Okay, if you know that paying off your balances each month shows that you're capable of paying bills, something creators and lenders want to see. The karaoke will be sometime this week. I'm not sure. Yes, sorry. There was another question coming in. Okay, so since a large part of your credit score is based on the timeliness of your payments, paying your balances on time improves your credit. Okay, it's very important, like I was saying before, pay your full balances each month. Also keeps you having to avoid racking up your credit card debt. Again, not all of your monthly payments are listed on your credit report. Bills that aren't regularly reported to the credit bureaus won't affect your credit score as long as you're paying on time. However, any bill can potentially wind up on your credit report if you become delinquent and the account is sent to a third-party collection agency, also known as a debt collection agency. Prevent negative accounts from being added to your credit report to build a good credit score. A serious delinquency like a debt collection can be hard to overcome. Having a credit card balance isn't necessarily bad as long as you pay more than the minimum each month to pay off your balance as quickly as possible. Avoid, and I mean really avoid, making late credit card payments. And continue to keep your balance at a reasonable level, like I was saying before, below 30% of your credit limit to maintain a good credit score. The longer you have credit, the better it is for your credit score. Leave your oldest accounts open since they help increase your credit age and build a good credit. Closing an old account won't remove it from your credit report immediately, but after several years, the credit bureaus will eventually drop old closed accounts from your credit report. So, another question came up from the email is, how long does it take to build a good credit from scratch? Building a credit score from nothing takes patience and discipline. It won't happen overnight, but you can do it. The things to speed up the process and make sure your score doesn't slip in the process. To build a credit score from scratch, you will first need to use credit, such as opening and using a credit card or paying back a loan. It will take roughly about 6 months of credit activity to establish enough history or credit scoring, which is used in 90% of lending decisions, ranges for 380 to 850, and a score of 700 is considered a good credit score. Scores over 800 are considered excellent. Don't expect a spectacular number of right off the bat. While you can build up enough credit history in less than a year to generate a score, it takes years of smart credit use to get a good or excellent credit score. When you're just starting off to build a credit score, time doesn't work in your favor. I know, it's shocking, isn't it? Lenders want to see good behavior over time, which is much of what credit score take into account, like I was saying before. Number 1, payment history, 35% of score. Have you made payments on time consistently? Number 2, amounts owed, 30% of score. How much debt do you have combined compared to how much available credit you have? Number 3, length of credit history, 15% of score. On average, how long have your accounts been open? Number 4, new credit, 10% of score. Have you opened several new credit accounts in a short amount of time? And then number 5, credit, 10% of score. Do you have experience in managing different types of credit and loans? Proof that you have making payments on time and don't carry large balances on credit cards make you less risky and more trustworthy. Responsible behavior carry more weight when demonstrating over time too, which is why building a good credit score from scratch does not happen overnight. Again, that is true. Okay. Unfortunately, this tricky part about building credit score is getting the credit you need to create history for a score. Fortunately, there's some ways to establish a credit history and a good score. Secured cards are designed for those with no credit history or those with rebuilding credit. You can open a secured card when you aren't eligible for other loans or other lines of credit, as I called before, because this type of credit card requires a deposit. The deposit acts as a collateral for the insurance if you stop making payments, so it's less risky for them to approve you. Okay? Secured card deposits are refundable. Many insurance will upgrade you to an unsecured card upon request after you've been and you have demonstrated to them that you can wisely manage the card, and again, making sure you pay off your credit card on time and in full. Credit card issuers report card balances and payment history to the credit card bureaus typically every 30 days or once a month. So it's easy to build a credit history with a credit card since those factors have big impact on your credit score. Each month that you make an on-time credit card payment and don't carry a balance on your secured card, your credit score should rise. It will take some time, but it will rise. While you might not be approved for regular credit, you could become an authorized user under someone else's account, like a parent's or spouse's account. Authorized users have a credit card and can use it just like the primary account holder, but have no legal responsibility on the account. But don't forget, if you run up your parent's credit card and don't pay it off, that means your parent's score will decrease. Credit score will decrease. That's not good at all. The credit history of the account shows that up on the authorized user's credit report so long as the card issuers reports authorized user data to a credit bureau, which can give you a credit score boost. But again, just be warned, if you go this route, the account needs to be in good standing, as I said before, with a low balance and a history of on-time payments. If not, being an authorized user will not help you build a good credit score. Becoming an authorized user is a way to jumpstart credit score growth and is not a long-term fix. Real credit score growth will come from building your own credit history, not piggybacking on someone else's. Think of this option as a stepping stone to get you to a next credit tool, whether it's your credit card or a small personal loan. When you get a credit builder loan, the lender will deposit the amount you approved for into a savings account. Then you repay the loan over time plus interest if you don't pay on time. But again, I cannot stress this enough. Please do not have any money owing month after month. That will cost you more to pay back. So make sure to pay back on time in full every month before the due date. Okay? So unlike a traditional loan, you don't walk away from the bank with money right away. Instead, once you've paid off the credit builder loan in full, the lender will give you the money with any interest earned from the savings account. This is different now, okay? This process establishes payment history data for your report. As long as the lender reports those details to the credit bureaus over time. Before getting a credit builder loan, verify the lender will report your payments to a credit bureau. So see if non-credit bill payments count towards your credit history. You're probably already making rent and utility payments. If you do, just make sure it's on time, and that good payment history may and will help you build up a credit report over time. I mentioned before. Not all landlords report rent payments to a credit score bureau, but check to see if yours does through an outside service. If not, there's renting reporting services such as RentTrack and Pay Your Rent that will process your rent payment and report it to the credit bureaus for a fee, okay, if your landlord is not signed up. A small tip, rent payments may not be factored into your credit score depending on the credit bureau, but proof of good payment history on your credit report can help you access lines of credit that will, okay? All happy? You can also opt in to a new tool offered by the credit bureau, Experian, that includes utility accounts such as your mobile phone and electric bills on a credit report and factors them into your credit score. Just please note that this won't impact your credit files with Equifax or TransUnion. The other two major credit bureaus. So if a lender does not use Experian for credit reports and credit scores, the lender won't see the boost. So how to maintain a good credit score, you may ask? All it takes is to raise your credit score are positive changes to your credit report information. So again, if you make sure you pay your credit lines in full, it will gradually increase your likelihood of getting better credit score, thus getting better credit history, and you will succeed in life as well. Your financial life, you will succeed. Okay. So it's actually easier to damage your credit than it is to build it. So here's what you should do, okay? Only charge what you can afford. Again, for new viewers, only use your credit card for the amounts that you know and that you can afford to pay back on the same month or before the due date, okay? Credit cards are a tool, not an excuse for a shopping spree, as mentioned before. If you open a card to start building a credit score, use it for small purchases to fit your budget and pay the card off in full. Repeat after me, in full. Each month. Regular use and full payments are important as your credit utilization ratio, and that means use only, I would say again, 30% of your credit limit. So let's say you have a credit limit of, I don't know, £1,200 or dollars. 30% of that is, let's say, 300 something pounds or dollars. So just make sure whatever it is your credit limit, use maximum 30% of your credit limit. Okay, so regular use and full payments are important as your credit utilization ratio, the proportion of the debt compared to available credit, is the second biggest factor impacting your credit score. Hello. So if you carry a balance, pay more than the minimum due balance, okay? Like I was saying before. Don't just pay the minimum balance. If you can afford it, please ensure you pay it in full. That's right, in full. Pay your credit card and other lines of credit in full, the same month or before the due date. That means you will not have to pay any interest, and also it will improve your credit score by you paying all your credit in full. So the goal is to keep your credit utilization ratio as low as possible, so there's more you can pay each month. the better. You will chip away at your debt faster, helping you to decrease your credit utilization rate and raising your score. Yeah. And you will save money on your interest, like I mentioned. So I'm just reading from what I wrote to my viewers before, because I had some emails. Pay your bills on time. Since payment history has the most impact on your credit score, don't let late payments derail your progress. Don't apply for lots of new credit cards. That's because when you apply for a new credit card or loan, the issuing bank will check your credit, which is considered a hard inquiry. Hard inquiries will cause your credit score to dip temporarily. It'll bounce back as time passes and more positive behavior is reported. However, if you are already starting from scratch, even a slight dip of 5 to 10 points can be significant. Plus, credit bureaus keep tabs on how many times you apply for new lines of credit. Too many hard inquiries on your credit report can be a sign that you're desperate seeking money and risk posing lenders big risks, and they don't want that. And like I was saying before, when you are new to credit and building a score from nothing, time is your friend. Even a year from now, if you have a card you no longer want to use or keep, just keep the account open unless it charges you an annual fee. But again, like I said as well, just make sure you use something and pay it off each month. The length of your credit history directly impacts your credit score. So the longer your accounts are open in a good standing, the better your credit score. You can view, and you should view, your credit file. You can do it free of charge. Equifax.co.uk and TransUnion. There's some of them I recommend. Again, this is not sponsored by them. This is sponsored by airbank.co.uk. So the other email I had was some ways to establish solid credit history. So as you know, your credit is important for everything from getting a loan to buying insurance. Okay, but it takes time to earn high credit scores. If you're new to the world of credit or repairing your credit, it's best to begin building credit as soon as possible. There are no quick fixes, unfortunately, but several techniques enable you to establish credit, and with patience and hard work from you, by doing what I said before, paying your credit card in full, you can enable to establish credit, and with you can just build it off like that, to establish a credit history that will be attractive to other lenders and other banks. For example, you need to borrow money. Thank you. You need to borrow money and make all of your payments on time. It's that simple, actually. But it's not necessarily, well, it is simple, but it's not, if that makes sense. You can certainly see improvements in short period of time, but significant ones changes take time. The strategies below will help you get the short term. I'm just reading what I wrote to the lady last week. Okay, you don't have to move through these in order, but just easiest approaches are listed first. Okay, so cash secure loans. One of the easiest loans to qualify for is a loan that you've already paid off. With a cash secured loan, you borrow against money that you have in savings account or certificate of deposit, or SD, at your bank or credit union. Lenders take little risk with these loans. They can just take the cash if you fail to make payments. So it's easy to get approved. For example, you might deposit £500 or dollars at your bank and get approved for a £500 or dollars loan. You make small monthly payments on the loan, and over time your credit improves. Okay. Secured cards. Secured credit cards. Yeah. Variation on cash secured loans. A secured credit card also allows you to borrow against money that you deposit with a lender. The difference is that you receive a plastic payment card that you can use for in-person or online purchases. You can also keep your loan balance at zero. Keeping a balance on the card doesn't improve your card credit score any faster, which helps to minimize interest costs. But just make sure that a second credit card is not the same thing as a prepaid debit card. Okay, there's two separate things. How about help? You can get some assistance from a consignor. A consignor is somebody who completes your loan application with you and helps you get approved by promising to repay your loan. A consignor should have good credit and enough income to qualify for the loan. Essentially, the consignor is the reason your loan gets approved, although the loan proceeds goes to you. If anybody is willing to do this for you, that loan will help you establish credit as long as you make all of your payments on time. Consigning is a huge favor, yeah, and it's risky for the consignee. If you fail to make payments, the consignor is 100% responsible for paying the loan, even though you get the money. So it's not good, is it? That's what I mean. Make sure to pay the loans on time, anything on time. Authorized user. If somebody already has a credit account open, they can add you as an authorized user. You receive a card with your name printed on it, and you can use the card for purchases. However, you're not responsible for repaying the loan. Just note that this only works if the card issuer reports authorized users to credit bureaus. What about retail programs? It may be very similar to what I said before, but anyway. Instead of borrowing directly from banks and credit unions, you can borrow through retailers who fund loans using finance companies or banks. You've probably seen offers to buy merchandise on a monthly payment plan, such as Argos and other catalogs. You can say those are called retailer program or credit lines, because it's not a credit card, but it's retail credit. Okay, so the same goes for cards issued by store cards and gas stations. They make easier to qualify for a standard credit card, but you need to make sure that the loan activity will be reported to the credit bureaus. If you go that route, be sure that you pay your balances quickly. Don't get caught in the trap of paying minimum payments, or you'll end up paying significantly more for everything you buy. This concludes this show number 2 of Credit Management, sponsored by airbank.co.uk. Catch you next time. Goodbye.